Hey everyone, it's Paul and Ian on the Incast. Ian, I'm now a regular guest. I guess I shouldn't really say call myself a guest anymore. I'm
Yeah,
permanent.
yeah, co-host Paul Mampilly.
I've got my special Occupy Mars Ian Cast hoodie on for no particular special occasion. Maybe we can focus on. I have no idea how many weeks this is of social distancing. However, maybe this is a reason for us to move to Mars where there'll be natural social distancing. It's a big planet.
I mean, you could also link it to Tesla, but we'll get to that in a minute, I guess.
Right. Well, let's do our usual coverage that a lot of folks like. Ian Cast getting a lot of views, a lot of comments. And before we start, just want to say, hey, subscribe to the channel, give this video a thumbs up if you like the Ian Cast. Let us know what you like about it, or maybe you hate it and we suck. And let us know about that too. Um, let's go with what's going on in the stock market. Big move up, and unshockingly, at least for you and me, people hate it.
Yeah, no, I know. It's crazy. Well, it's because people don't like to be wrong, I guess. I mean, but hey, the stock market's going up, and I think that's a good thing, a universal good thing. So
Right.
that's
So I think we've gone from where people like seem to be genuinely now a little angry that it's going up, and there seems to be still an extraordinary level of confusion as to why this would be in the face of macro news that seems like, at least to any number of folks, suggest that the stock market should be going down. So it's confusing for us.
yeah, exactly. So yeah, and one of the things we've been talking about is how kind of during this recovery that the stock market has seen, some of the bigger stocks like the S&P 500, I think the top five stocks were worth like 20% of the total market cap of the S&P 500, which is pretty crazy because there's over 500 stocks in there and the top five have a 20% market share. And those stocks have kind of lagged behind during the recovery. And instead, we're seeing that market cap that was in them being pushed down into smaller ones and smaller companies. And that has made for a rise in the equal weighted S&P 500, where all the companies get an equal weighting. So when the smaller ones do better, that ETF, which the ticker symbol for that is RSP, and you can see that this has gone up way more than the S&P 500, the regular one during this past week. So these smaller companies are getting a big bid, and that signals a very, very healthy stock market.
That's right. I mean, and I believe as of yesterday, today it's probably slightly less because the equal weighted S&P 500 was down more than the cap weighted. But yesterday was the difference between the two was 6% since
Yeah,
the March bottom. It's 6%. So that's an incredibly good sign. And then we have seen and we have been noting, I believe it was yesterday, when Apple did nothing, and actually both S&P 500s, the equal weighted as well as the cap weighted, went up substantially.
yeah, exactly.
And
Yep.
then Microsoft didn't do a whole lot either, and it went up. So in other words, there is definitely a big transition happening, and it is goes very much to what we've been talking about for a very long time, which is the America 2.0ing. Can I say
Yeah.
that? America 2.0ing of the S&P 500. The Dow is, it's almost prehistoric in terms of what's in there. I mean, it's going up. However, really, there's not a single company that I would want to own at this point in the Dow. I mean, is there a company you'd want to own the Dow in?
No, absolutely not.
I
No.
mean, there's companies in the S&P 500 for sure, but the vast majority of what we want to own is the Nasdaq Composite. And we throw out a bunch of companies in the Nasdaq 100 for Delta and American Airlines and stuff like that. And we should mention while we're doing this that our colleague Patrick Goodrich actually wrote something that's on Bull Profits this week, talking about how when the Dow is reconstituted, what is going to take it to 100,000, which is what I have told people America 2.0 is going to ultimately lead to. However, it is not going to happen with the current set of stocks. We need to make that 100%, 1,000%, 10,000% clear. The
Yeah.
existing 30 stocks represent the past, America 1.0. And it has been pretty much a tradition for the folks that pick the Dow stocks to be late. and to pick it when the vast majority of the gains are in. So we've seen like a big transition. We were talking about various sectors where we're seeing new leadership.
Yep. Yeah. One of them is the cloud stocks, which we talked about before. There have been like a lot of new cloud stocks, and actually a lot of them we've added to the IPO Speculator newsletter. But these stocks are seeing a lot of demand. And when that happens, when you get a bunch of new stocks into one sector that's like really high growth, really attractive for investors, that sector is going to do really well. But there's also, if the stocks go up easier because they're newer, there's not as many people in them, so less people have them, more people are willing to buy them. That means there's more people out there that are going to push the stock up. Whereas with stuff like Apple and Microsoft, like who doesn't have Apple and Microsoft as a big fund manager? It's in pretty much every big mutual fund, every big ETF. So when these new smaller companies enter the stock market and they're growing at like 40 to 60% a year in cloud, which, the coronavirus has accelerated the adoption of the cloud, of working from home, things like that. And these stocks, it's like a perfect time to get into those because, not a lot of people have them, and a lot of people want them. So all that rushing into these stocks is going to make them the new leaders.
Yeah, and it's not the one thing that most people fall into trap of is they go chase the winners of the last big move up, and so people are chasing Shopify, Trade Desk, to some
Right.
extent Salesforce, Splunk, and these. But the demand for that is I mean, I'm sure those will go up a little bit. However, if you want to make the big money and be right looking at it 2-3 years from now, it's the stocks that we're looking at that we're putting into IPO Speculator, True Momentum, Extreme Fortunes, and we're doing trades in the two option services that Ian and I run, which is Rapid Profit Trader and Rebound Profit Trader, because we are all over this. And we know from past history that this is like a rookie mistake. Well, it might not even be a rookie mistake. A lot of experienced traders even make this mistake of like chasing this stuff because like, hey, that thing made a new high and it looks cheap. And then it first underperforms a little bit slowly, and then slowly it gets hit hard because there's always sellers into any sustainable sort of up move. All the people that bought at the old high are out there constantly selling, and which goes to really ultimately our way of looking at the world, which is demand and supply going upness, and that way. And then we also talked about a shift in leadership to some extent in biotechnology, and where you were seeing
Right.
old names topping out.
Yeah, so I think it's kind of like the same thing as it is in cloud, where you have these like $100 billion biotech companies that have gone up like 400, 500% over the past few years. So a lot of people own them. And like the same thing, there's a lot of people out there that have them and not as many to buy them to keep that sustained growth in the stock price. But there's a whole new wave of biotech stocks, like in genomics, precision medicine, and that's like I think that's the biggest influx of IPOs that I've seen in biotech, and number two would be cloud. So we're seeing kind of the new leadership take space in both of those sectors right now. And it's the same kind of thing that I was saying before, where the smaller companies are taking away the market cap of the bigger companies. The money is just flowing into these new companies that people didn't have the opportunity to invest in before. They're growing faster, they're newer, they've got better technology. And so that's really what makes for a new wave of leaders in any sector. But those two especially are what I'm seeing right now.
Right. In hindsight, it would look like really the move from sort of the bottom in 2016 to the top in 2020 was really like a bull market in about 20 very large cap stocks, Apple, Microsoft, Amazon. Some of them are still in bull markets, but for sure, it does look like Apple has peaked. It might get near its old high, it might even push a little bit past it. However, in terms of making a bet for it to make huge, big, additional gains, looks to be pretty much done because of what you said, which is like most people own it already.
Right. Yeah. It all just comes down to supply and demand, really.
That's it. I mean, so we've spec'd out like the new leadership in cloud, and there is also a little bit also of a new leadership in semis as well, and semi equipment, which we've seen in the past. The semi equipment sector used to be Applied Materials, took all the market cap, but there's an entire layer now underneath there, driven by some of the new technologies that you have, you've talked to me about.
Yeah, so some of these, one of the big ones that I see, the kind of underlying technology, is expanding bandwidth for streaming, because that's another thing that the coronavirus has accelerated. A lot more people are on the internet more. I don't think that's really going to change. I think a lot of people are going to stay working from home, doing video chats like this, and also the rise of streaming through Netflix, Disney, Apple TV, all those things. There's a huge demand for streaming. So there's a few semiconductor stocks out there that I think are going to be the leaders in that, just because there's going to be a whole revamping of that infrastructure. Then, of course, data centers, they need power. You always need more memory to store data. So I think memory semiconductors are going to do well. And we've seen companies, the leaders in both of those, in the memory semiconductors and in the streaming semiconductors, say that the coronavirus lockdowns, quarantines have actually boosted the demand for their products, because people are using this time to really revamp the infrastructure for these technologies.
In other words, an acceleration capital spending. And then you had written, I was just looking up what you had sent on extreme ultraviolet lithography being one, the places. And then we've seen gallium nitride, new materials that are being introduced into this space, silicon carbide, for any number of applications. And this one company, which is in the $10 million portfolio, has some incredible numbers in terms of their growth.
Right. Yeah, I know. The semiconductors in general, one of the ones we've mentioned a couple times is Micron, and then AMD. These stocks aren't letting up at all. I think they're going to be back making new highs pretty soon.
Yeah, digital steel, and I mentioned digital steel in my bull profits for Tuesday. You can invest in that using the ticker symbol SMH, which is the VanEck Semiconductors ETF. ETF means a basket of stocks. It has all the stocks that Ian just mentioned, and then a lot of other stocks too. However, if you want laser-focused portfolio of purely America 2.0 stocks that are really get you into the heart of this really revolution, movement, this moment in time when we're moving from one way of doing things, one world to a new world. Profits Unlimited is really the best way to get introduced to it. And if you want in on it, click on the strong hands above, and that will take you to my video presentation on America 2.0, and we'll give you an introduction to America 2.0, give you two special reports. One report tells you what stocks to dump. One stock that really gets you into the heart of America 2.0. All right, let's move on from the market to our usual roundup on Tesla, which just reported yesterday and had good numbers.
Absolutely, yeah, way better than expected. They made a big profit, which was not expected. It was way higher than the estimate. I think that's at least the third quarter in a row that they've had an unexpected profit. They had 88,000 deliveries, which is amazing considering that the factories were shut down for part of the first quarter. Production was down towards the end of it, but they still had, they delivered 88,000 cars, which is pretty amazing. Their revenue grew 32%. So overall, yeah, it was an amazing quarter for Tesla considering the circumstances, especially.
Right. And somebody's like, hey, well, Paul, how come the stock didn't go up? Well, actually it had gone up a lot ahead of this. So it's no surprise that once the short covering happened in the after hours, that there was some selling to it. Now, many people say it's because of what Elon Musk said on the conference call. However, I can tell you the vast majority of people who own Tesla know that Elon's a passionate guy and he wants his car plants to be open, being that the vast majority of coronavirus cases have peaked. And he's going to have strong feelings about it. And he's, I believe, as the CEO of Tesla, he can say what he needs to say and try and push people to understand his situation as well.
Right, exactly. And they've also, they've got the solar roofs growing. They've got the Model Y coming out. They've got Cybertruck. They've got the semis coming out next year, the semi truck. So all in all, the growth for Tesla ahead, I think, is going to keep, kind of bewildering people. I'm not sure when the surprise is going to fade. Quarter after quarter, everybody seems shocked that they're doing so well, but I don't see that really letting up anytime soon.
Yeah, I mean, we've said that Tesla, we believe, can hit $1,000. I believe it can actually go past that this year. Many people said that when it hit 950 that it was going to crash. Just before coming on, we saw an analyst that says that Tesla stock should be worth pennies.
Yeah, yeah,
Pennies. So I mean, so there's still an extraordinary amount of really of hate, dislike, negativity, pessimism, everything. The opposite of BOP, which is what I say on my Twitter handle at Mampilly Guru, which is BOP, bullish, optimistic, positive. You can go ahead and give your Twitter as well, Ian.
yeah. I'm at Ian Dyer Guru, and yeah, I think whenever there's a huge new technology, people kind of resist it at first. A lot of people, some of the general public's going to accept it and see it for what it is, which is it's making everything more efficient. It's an amazing technology in pretty much every way, and Tesla is by far the leader in electric cars, in autonomous cars, and in batteries. So they've got a lot of things going for them.
Right, and I mean the autonomous car opportunity, which people said was a pipe dream, is Elon being himself, hyper promotional. However, I believe that you are actually in the next 12 months we are going to start to see that unfold, because now regulators, government, they all want this, and so suddenly they will push this forward and accelerate the development of this.
Yeah, so yeah, one of the companies I saw, there was like this tiny French company. We actually have it in $10 million portfolio, but they were using their autonomous shuttles at hospitals to deliver medical supplies to coronavirus patients. So, I mean, even in the coronavirus, the lockdowns, the pandemic is accelerating all kinds of technology.
That's right. I mean, that's an unintended consequence of what was there, which is that it is causing things that were sort of in decline, accelerating their decline, and then really accelerating the adoption and use of pretty much all the companies that are across all of our services. I mean, it's really fast forwarding America 2.0 to today. Something that might have taken 3 to 5 years is now happening in the space of weeks. So our companies in general are benefiting. The vast, I believe every portfolio is pretty much ahead of the S&P 500 because of this reason. So Tesla, I'm still BOP on, bullish, optimistic, positive, still think over $1,000. And once there's these lockdowns and they go back to production and they start really, the semi-truck is still ahead. New advances in autonomy are ahead. So, I mean, I believe that Tesla, while, you never want to buy into a spike, still going to go up.
Right. Yeah, for sure.
Cannabis, quickly, we did a little roundup right before getting on. And something we discussed, frankly, last week, we said, maybe it's possible that someone really sponsors some legislation for federal approval of cannabis around the nation. And a senator from New Jersey has actually introduced legislation.
Yeah, it's definitely gaining more traction from all this. I mean, there was also one of the politicians from New Mexico who was like, if we had actually legalized it, we regret not legalizing, but if we actually did, we'd have over $100 million in tax revenue that we could put towards the coronavirus situation. Like, it can really, bring in a lot of tax revenue for governments, as we've seen with California and Colorado, among others. Those two alone have brought in billions of dollars of tax revenue since marijuana was legal there. So it can really be a boost to states. And you saw marijuana actually be an essential business. So it went from illegal to essential in a few years. So I don't think we're far off from federal legislation really being taken seriously.
Yeah, and also MJ, which is the ETFMG cannabis ETF, which has all the big marijuana stocks in it, has gone up about 50%. Canopy, which is arguably the leader, is up 100% from the bottom. So there's definitely people coming in to buy these stocks, and into the normalization of economies. You're going to see all those people that bought these stocks come in and continue that demand and push the demand for these stocks higher too.
Absolutely. Yeah. And I'll reiterate my claim that MJ has bottomed. It's not going to ever make a new low. I think it still could make 100% gain this year, which is like 200% from here. I still think it's very, very possible that can happen.
I can tell you, Ian, from having been in markets for a very long time, which is that it will shock people as to how things can turn. Just like in February, no one imagined that we could see a 30% decline. And equally, when it goes back up and makes new highs, no one is going to be willing to believe that right now. However, then at that point in time, it will all seem very obvious in hindsight.
Yeah, I mean, we also just saw Tesla make like a 300% gain in a couple months.
Right.
So this stuff is definitely possible.
I mean, we also had, I believe, Wayfair in the Profits Unlimited portfolio go from, I think, 18 at the low to
Yeah,
115. So, I mean,
yeah,
you want to count what how much that is for it's there. All right, so we're bullish, optimistic, positive on cannabis, and Ian looks so. Probably the one that we have the most sort of to talk about is Bitcoin, which
yeah.
has gone up, I think, 40% in 2 days.
Yeah, yeah. Just, I mean, even just like a month and a half ago, it was at like 4,000. Now, last night, it went above 9,000. So it's more than doubled in a month and a half, if that. So yeah, it's made a huge run. It's back to where it was before. Actually, it's higher than it was before it made that big drop on I think March 13th. But yeah, we're back higher. The halving is coming up in a few weeks, so that's going to be pretty monumental, as it has been the other couple times it's happened. After each halving, I think Bitcoin has gone up like at least 1,000% over the next couple of years. So I think we have really bright things ahead for Bitcoin for sure.
Right. I mean, and my view on this, that I don't believe we've had Bitcoin with this kind of profile, demand profile, post or crisis, halvening happen, where we've got a lot of accumulation by whales that like own the majority of Bitcoin, extraordinary level of Bitcoin accumulation from small holders that we've put up charts in the past, Ian cast.
Yep.
And then if you look at Google Trends, massive searching for, for Bitcoin and
Yeah.
Bitcoin halvening. People are interested. We know because we get emails from a lot of people asking about how to get in, what to do. And this halvening is pretty severe. I mean, we're being that it's like the third halvening. So like the quantity now that we're getting down to in terms of what the miners can generate is now down to 6.25.
Yeah, and combined the halving coming up, a lot of miners were anticipating that, but a lot of them got wiped out because of that one drop. That when Bitcoin went from like 7,000 to like 4,000 or even lower on some exchanges in one night. So that wiped a lot of people out because they knew the halving was coming up. They were making like nothing. They lost a ton of money from that. We've got the strong miners still in. They bought out all the assets from the other ones that went out of business. So now they're extra prepared. And I think, they're anticipating the price of Bitcoin to go up because of all that extra demand that we saw since that crash. Right now, the amount of accounts that have over 1,000 Bitcoin, so those would be whales, that is at a 2-year high. The last time it was higher was like right after the peak of the last Bitcoin bull run when it went to 20,000. And likewise, for the smaller buyers, the amount of accounts with 1 Bitcoin and with 1/10 of a Bitcoin are at all-time highs.
And for those who don't know, I mean, generally speaking, what happens is that the miners that mine Bitcoin tend to accelerate mining into an halvening because obviously then they're only going to get half of that going forward. And then what they tend to do is sell after the halvening. They accumulate it. However, the crash has kind of reversed everything. In
Yeah,
other words, they got liquidated during the crash and then posted. And at that point, a number of them would have gone bust or ended operations. And then the ones that were more well capitalized benefit from multiple ways. A, they didn't sell their Bitcoin because they were capitalized enough to withhold during that period. And then as the halvening unfolds, the difficulty level of Bitcoin jumps, which requires an investment into computing equipment to be able to actually mine for Bitcoin in the future. So everything now jumps up a level that favors what we call strong hands. In other words, people that have the capital to hold something even through volatility.
yep, exactly. And we saw a lot of that too. A lot of people didn't sell during that crash, and actually they ended up buying. The Bitcoin is up, like I said, more than 100% since that bottom in like a month and a half. So a lot of buying from that shows that a lot of people have strong hands, and now we've got a whole new crowd in there that bought at the bottom. We're waiting for that to happen because they really think that Bitcoin does have a future. They just wanted to get in a lower price.
All right, so I mean, Bitcoin's about 8,500. The way I'm thinking, it's at 10,000 fairly quickly, and then it's really a jump there. I believe there's very little selling pressure between 10 and the old high in 2019, and then from there, it's new highs. I mean, that's where we're headed to. All right, Ian, we've gone on for a long time, so let's end this Ian cast. You go first, and I'll wave everyone goodbye.
All right, everybody, have a great weekend and happy Friday.
This is Paul saying bye.